Good day, grade 9s. I will now be explaining the accounting work that I did during the extra lessons that you were supposed to be at in the past week. So for those that weren't at the extra lessons, this is a lesson for you. Your test that you will be writing is going to be on accounting equation and the general ledger. Now I'm going to explain to you how to complete the accounting equation and how to complete the general ledger. But first and foremost, I wanted to quickly make notes. When we do the accounting equation, what is the purpose of doing an accounting equation? The purpose is to see how this specific transaction influences assets, owners' equity, and liabilities. So you need to understand and you need to study which accounts falls under assets, which accounts falls under owner's equity, and which accounts falls under liabilities before you can do and understand accounting equation. And this is actually grade 10 work because in grade 10 we gave you a one-pager with all the assets, all the owner's equities, and all the liabilities. So just to go through it again, your assets are basically your money. It's everything that belongs to you. It's your equipment, it's your vehicles, it's your trading stock, it is your petty cash, cash float, bank, debtors, etc. Owner's equity is all your income and your expenditure. So all your income and your expenses. And liabilities is the money that you are liable to pay back to the bank or other people that you owe money to. So this will be, for instance, like a loan from the bank or creditors control. Okay, so let's quickly look at the steps, and I want you to please make notes of this, that you need to follow when you complete an accounting equation. The first thing we do is we need to identify the verb. Because if you identify the verb, it will tell you whether this transaction is a payment transaction or a receipt transaction. If it's a payment transaction, you need to book this information over into the cash payment journal. If it is money you received, you need to book it over to the cash receipt journal. And again, this is typically grade 8 work. Now, when you see the following verbs, bought, paid, or received a receipt, then you know it is cash payment journal. You need to go and study this. When you see the transaction says that you received money, or there was cash sales for the day, or that you have issued a receipt, issue means given a receipt to someone, then you know that you've received money. So it is cash receipt journal. The second step we follow when we complete an accounting equation to make it easier for you to understand. After you have decided which, or you have claimed which journal the information needs to go to, you now have to state which two accounts are involved in this transaction. Now, in EMS, grade 9, you will normally in transaction, you will always have bank and another account involved. For instance, if you buy a computer, it will be bank and equipment. If you buy trading stock, it will be bank and trading stock. But remember, when you have a sales transaction, when a sale took place, or when you received sales for the day, 4 accounts are involved. And this is the new work for grade 9. Remember in grade 8, we did a services business. So then it is bank and current income. But now in grade 9, we are dealing with a business that sells trading stock. So it is bank, sales, because we are receiving money that goes into the bank because of the sales transaction. What are we selling? We are selling trading stock. What is the value of the trading stock? Cost of sales. Okay, so for every single account, except the sales account, there will only be 2 accounts involved. Bank and whatever you are paying for, or whatever the account's name is that you are receiving money for. Step 3, you need to draw the T account. Now, if you have lesson or class with me, then you will understand what I mean by the T accounts. It's almost like a mini general ledger. So you draw the T accounts for bank and the other account, or you draw the 4 T accounts as seen here. Step 4, you need to determine which of these accounts are assets, owner's equity, or liability, because that will explain to you whether it's debited or credited. As you know, your assets is debit plus, credit minus. Your owner's equity is debit minus, credit plus. Your liabilities is debit minus, credit plus. So, what do I mean with that? In accounting, you need to know the general ledger, that it consists of a debit side and a credit side. The left side is always the debit side, and the right-hand side is always the credit side. So assets increases on the debit side and it decreases on the credit side. Owner's equity is an expense on the debit side and it is an income on the credit side. Remember, owner's equity is all your income and your expenses. Liabilities also decreases on the debit side and increases on the credit side. So then after you've completed this and you have identified the amount that's being debited or credited and that increases, decreases, then you place the information in the table provided. So we are now going to do this accounting equation together. So what is the first step? The first step is identify the verbs. You bought merchandise and you paid by check. Now, what is merchandise? If you read the following words, merchandise, merchandise, stock, goods, inventory, then you know they are all the same. They are all referring to trading stock. So merchandise, stock, goods, and inventory, it's another name for trading stock. So if you buy merchandise, you are basically buying trading stock. You cannot say it is bank and merchandise. There's no such account as merchandise. The name for the account is trading stock. And then you pay by check to 2,500 Rand. So this is cash payment journal. Okay, the second transaction, the owner bought, that is the verb, a computer for his son, and he paid with a check. Cash payment journal. Sold goods. When you sell goods, you receive money. So it is cash receipt journal. Step 2. You need to determine which two accounts, bank and the other account is involved, or in a sales transaction, there's 4 accounts involved. So you need to first determine that. Let us do transaction number 1 together. You bought merchandise and you paid by check 2,500 Rand. So the first account will always be bank. And the second account, which is merchandise, also known as trading stock, which is the actual account. Okay. Step 3. We've drawn the T accounts, and now we're going to do step 4. We need to determine whether these two accounts are assets, owner's equity, or liabilities. Bank is an asset. Trading stock is an asset. And as you know, all assets are debit plus, credit minus. When you buy trading stock, does bank get money or does bank lose money? Obviously, bank loses money. So how much is bank losing? 2,500 Rand. But we have bought trading stock. So does our trading stock increase or does it decrease? Are we getting trading stock or are we losing trading stock? We are getting trading stock because we just bought it. So even though my asset decreases because my bank account is losing money, I am receiving more assets, trading stock in my business. So step 5, you need to now place this information into the table. So we are going to place this information into the table. It is number 1, transaction number 1. What is the subsidiary journal? It is cash payment journal. So we write cash payment journal. Which account is debited? Remember, the debit side is the left side, the credit side is the right side. Which account is debited? Trading stock. Which account is credited? Bank. Now you need to determine whether it's an asset, an owner's equity, or a liability. They are both assets. So you're going to copy this and write it down in the assets, because trading stock increases my assets because I have more trading stock, but I'm losing money from my bank, 2,500 Rand, and you are done. So let us do the second transaction together. The owner bought a computer for his son and he paid with check, 60,000 Rand. So he paid and he bought. So it's cash payment journal. Whenever the owner takes money from the business for his own personal use, it is drawings. Remember, there are 2 main owner's equity accounts, capital and drawings. Capital is when the owner gives money to the business, when he deposits money into the business's bank account. That is capital. When the owner withdraws money from the business's bank account in order to pay for something for his son, or his wife, or his mother, or himself, then it is referred to as drawings. So whenever you read the owner bought, then you know it will always be bank and drawings. Okay, so step 3. We've done, step 2, we've determined which 2 accounts it is, and step 3, we've drawn the T accounts, and now we need to determine whether these accounts are assets, owner's equity, or liabilities account. That is step 4. Bank is an asset, debit plus, credit minus. Drawings is an owner's equity account, debit minus, credit plus. When we buy something, when the owner that buys a computer and he pays with a check, does bank get money or does bank lose money? Bank loses money. If bank is credited, drawings is debited. And by the way, you never ever credit drawings, because drawings is always an expense. So the bank gave 60,000 Rand to the owner, and that was for the expense of drawings. So now you have to place this into the column. It is transaction number 2. We know that we are paying, bank is losing money. We are paying on behalf of the owner, so it is cash payment journal. Which account is debited? Which account is credited? Remember, the left side is debit side and the right side is the credit side. Drawings is debited, therefore, and bank is credited. You will always credit bank when you pay, and you will always debit bank when you receive money. That's obvious, okay? So bank loses, your assets decreases with 60,000 Rand. And drawings is an expense minus of 60,000 Rand. Now we are going to do the most important transaction for your test, and that is when we sell goods. When we sell goods, there are 4 accounts involved. And they are grouped into 2 groups. When we sell, we receive money that goes to the bank. Why? Because we had a sale taking place. Remember it like that. What are we selling? We are selling trading stock. What is the value of this trading stock? cost of sales. So, step 2 we've done, we've identified the accounts, and step 3 we've drawn the T accounts. Now we're going to do step 4. Determine whether they are assets, owner's equity or liability accounts. Bank is an asset, so it's debit plus, credit minus. Sales is owner's equity, it's an income, so it's debit minus, credit plus. Trading stock is an asset, debit plus, credit minus. The cost of sales is an owner's equity account, debit minus, credit plus. Okay, so we're going to start with this one first. When we sell, does bank get money or does bank lose money? Bank receives money. If bank is debited, sales is credited. And by the way, sales is never ever debited because when you sell, you always receive an income. Trading stock. Now we're going to do the second part. What are you selling? You are selling trading stock. Now, when you sell trading stock, does your trading stock increase or does it decrease? It decreases. Now, I'm going to explain this to you because I've seen some of the learners do not understand this concept. Let us think for a minute about Edgar's. Let's say there's a very nice guest jean that you want to buy from Edgar's. Okay, so you are the auditor of Edgar's. Now people go and they buy the guest jeans. So money goes into bank because we are selling guest jeans, which is an income to us. The trading stock is the guest jeans. If we sell guest jeans to other people, do we receive guest jeans or do we lose guest jeans? We lose it. It's not on our shelves anymore. We don't have that trading stock anymore. The person that bought it took it away with them. So therefore, trading stock always decreases in a sales transaction. Now, remember, trading stock and cost of sales, they go together because the value of that guest jean you are selling is the actual price you paid for it when you bought it from the factory, and that is called the cost price. The sales price is a nice to have. That brings in profit to your business. But the actual value of the trading stock on your shelf is what you paid for it, you, the shop. So that is your cost price. So trading stock, we are losing trading stock to the value of cost price. If trading stock is credited, cost of sales is debited. And you do not, in EMS accounting, you never write on the credit side of cost of sales. Because cost of sales is always an expense to you. It's the cost of the thing that you are selling. So now we need to quickly confirm the amounts. Remember, when we sell goods, there's a sales price involved and there's a cost price involved. Now you need to first determine which one are they giving you or are they giving you both? Now in this transaction, you will see, they say sold goods, in brackets, cost price is 550. So they are giving you the cost price. So you do not know what the sales price is. What is the cost price? It is 550 Rand. Now, how do you calculate the sales price? Now there is a calculation you need to use. You need to study. Now, I'm going to teach you how to remember the calculations. There are two calculations, one for sales price and one for cost price. If you study the cost price calculation first, you will remember it. Okay, and I'm going to explain to you why. Okay. The cost price calculation, cost price, if I want to calculate cost price, I say sales price that is given to me over 1 times 100 divided by 100 plus the markup. Now, how I used to study this, or to help me to remember is that hand in hand with sales price goes 100. Now, the 100, in other words, is the one that goes on top, not below. So I used to memorize it like this. When I sell, it would be amazing if I can make 100 Rand profit. So I know the 100 goes on top. That's my association that I made to remember this calculation. Because if you know this calculation, you'll know the next one. Sales price equals opposite 1 over 1 times. Now you just turn this around. So now this one goes on top and this one goes below. Okay. So this is the calculation for sale price and this is the calculation for cost price. And you need to study this off by heart. We will always either give you the cost price or the sales price, and you must calculate the other one. So now in this transaction, we have given you the cost price. So we do not know what the sales price is. So we're going to make use of this calculation to calculate it. Now let us quickly calculate it. Sales price equals, what is your cost price? 550 is given to you. 550 Rand divided by 1 times 100 plus, what is the markup? 70%. So you say 100 plus 70 divided by 100. So that gives us 170 divided by 100, 1.7. So the answer is 1.7 times 550 equals 935 Rand. So your sales price is 935 Rand. Write it down so that you don't forget it. Sales price, 935 Rand. So I've got my sales price and I've got my cost price now. So now you need to fill it into the correct T accounts. Okay. Remember, the sales price is the amount that is deposited into the bank account. What is the sales price? 935. Can you see that the sales price will always be more than the cost price? Why? Because you want to make a profit. So the bank receives 935 Rand. And sales is an income of 935 Rand. But what are we selling? Trading stock. What is the value of the trading stock? Cost of sales. So I'm losing trading stock to the value of cost of sales, which is 550 Rand. Cost of sales is an expense, always 550 Rand. So this is what the stock that I'm selling to you, the stock that you are taking home that I'm losing, cost me. And I sold it to you for this amount. Okay, so the difference between this is the 70% profit that I'm making. So now you need to go and fill this into the table. Let's start with the first one, bank and sales. So you simply go and you write number 3. Which journal is involved? We are receiving money because we're selling, so it is cash receipt journal. Which account is debited? Remember, the left side is the debit side, the right side is the credit side for all accounting accounts. Which account is debited? Bank is debited. Bank is debited. Remember, when I receive money, bank will always be debited. Which account is credited? Sales. So assets increases. So I go to my assets column and I say assets increases because I'm receiving the sales of 935 Rand. Sales is an owner's equity account and it brings me an income of 935 Rand. Now you're going to do the second part of the transaction. I'm just going to fold the paper. What am I selling? I'm selling trading stock. Okay, and for what is the value? Cost of sales. Which account is debited? Cost of sales is debited. You write down cost of sales. Which account is credited? Trading stock. You do not have to fill in this information again because it's already there. Okay, so trading stock is an asset. Because I'm selling, I'm losing the trading stock. I do not have it on my shelves anymore. So my trading stock decreases with 550 Rand, which is the cost price. Nee? So assets decreases with 550 Rand because my trading stock is decreasing. Cost of sales is always an expense because it's the cost of the thing that I'm selling minus 550 Rand. And there you go. This is your accounting equation. So when you have a sales transaction, it will always be done in this way. And for all the other accounts, remember, it's bank and another account involved. Bank is always debited when I receive money and credited when I pay money. Okay, so now we're going to go on to the next activity, which is the ledger. Now, I've given you this as the activity that we did during the extra lesson, the compulsory extra lesson that you were supposed to attend. And we did not do activity 2F, so please ignore that activity. Please only focus on activity 2E. So if you look at activity 2E, this is how we're going to give it to you in the test. We do not need to give you all the information in between, because remember, it works like this in accounting. You complete the journals every single day from the 1st to the end of the month. And then you take the totals of each account and you place it into the general ledger. So we only need the totals. So I'm going to highlight the totals. Bank's total is 4,000 Rand. Sales total is 4,000 Rand. Cost of sales, 2,000 Rand. Now, I just quickly want to also talk about something. Cost of sales is there to basically support the sales account. Cost of sales, you never add cost of sales to get bank. So you can see here, bank is 4,000 Rand and sales is 4,000 Rand. It's not 6,000 Rand for bank because we do not add cost of sales in our cash receipt journal because cost of sales is the cost of the sale. So it is an expense, but it needs to be there because there was a sale taking place and we need to know what the cost price is because we want to see what the profit is that we are making. So you must always ignore the cost of sales column when you need to calculate the total for bank. So you will normally say sales plus all the other things that you have received money for. If it's rent income, you add that. If it is money from your debitors, you add that, but you do not add this column here. This column here is just a column that just gives us the amount of the cost price so that we know what the profit is that we are making. So it is not included in the bank price. Okay. So then in the CPJ, you will see that again, we didn't give you any information in between because it's not needed. We only want you to complete the ledgers, so we only gave you the totals. Okay, there's no total for wages. Okay, we don't need to do wages. So for the test, you need to do the 4 accounts that is attached here. So the 4 accounts is trading stock, bank, sales, and cost of sales. Okay, so I also want to say that, remember when you do your general ledger, I'm going to explain the process to you again. Every single day, from the 1st to the last day of the month, you complete the transactions in the cash receipt journal and in the cash payment journal. Then on the last day of the month, you book the totals into the general ledger. So after you have completed the general ledger, you'll see later when I do this, there will be things that's written on the debit side and things that's written on the credit side. So you need to balance the accounts. Now the balance drawdown for the account, let's say for January, will become the opening balance for February. And it will be a continuous cycle. So usually when they give you the journals and tell you to do the ledgers, they will give you the previous month's totals that is left in the accounts, and you can't throw that money away. You need to place it into the accounts. So for instance, they will say the balances for previous month, and then they will, for instance, say bank, let's say 30,000 Rand, trading stock, let's say 4,000 Rand, sales 8,000 Rand, and cost of sales, let's say 10,000 Rand. Let's say 4,000 Rand. Okay, so they will give you the balances for the previous month. We are busy with January, so these are the balances for December. The money, we have a positive bank balance. So if I do not give you a minus in front of the 30,000 Rand, it means it's a positive bank account. So it's going to be the balance drawdown on the debit side of bank. Okay, so these are the money that is left in the accounts from the previous month, and we cannot throw them away. We need to place them in the accounts. So the first thing you do when you complete the general ledger is you make sure whether there are balances for the various accounts from the previous month, and that you place them in the respective accounts. Okay, so let's start with bank. The balance of the previous month, December, for bank was 30,000 Rand. So we open our January books with a positive bank account of 30,000 Rand. So go to bank in your general ledger. And because it is a positive bank account, remember bank is an asset, so it's debit plus credit minus. And I don't know if you can remember from grade 8, because with lockdown and everything, we missed a lot of work, but the ledger works like the T accounts that we do in the accounting equation. We have a debit side and we have a credit side. So, and this you need to also know. I've seen many years that the learners do not know what each column is for. So they would somehow write the amount in the details column, which is not correct. You need to study that the first column is for the month. The second column is for the day. Then it is the details, the accounts. Folio is where did you get this information from? CBJ, CRJ, where? Trading, then it is the amount. Then there's a double line. Then we start with the credit side. Month, day, details, folio, where did you get this information? CBJ, CRJ, and the amount. You need to go and study that. Okay, so bank, if I do not tell you that bank had a negative balance, it will always be a positive balance. So bank's balance drawdown is positive, so it's going to go to the plus side as balance B for brought down on the 1st of January, because I'm opening my January's ledger with this money in my bank account of 30,000 Rand, and you are done. Now the second balance we need to place is trading stock. Trading stock's balance drawdown will always go to the debit side. So you're going to write down balance drawdown on the 1st of January, and it is 4,000 Rand. The second balance we have is our sales, 8,000 Rand. So you go to your sales, and remember what I told you, you never write on the debit side of sales. Sales is an owner's equity account. So it's debit minus, the left side is the debit side, the right side is the credit side, credit plus. So sales can never be an expense. It's always an income. So you always write the balance drawdown and everything else on the credit side. So sales Balance brought down is 8,000 Rand. Now we need to do, and by the way, it's on the 1st of January because we're opening our bank account, our sales account on the 1st of January with 8,000 Rand. The last balance brought down is cost of sales, 4,000 Rand. So you go to cost of sales and you write on the debit side, balance brought down, 4,000 Rand, the 1st of January. Why do we write on the debit side? Cost of sales is an owner's equity account, which is debit minus credit plus. And cost of sales is always an expense. It's the cost of the thing that you are selling. Before you are selling it, you bought it from someone, from the factory or wherever. So it cost you something. So it's always an expense. So now after you have placed all the balance drawdowns, that is usually given to you on the top side of the activity, you can now complete the general ledger. Okay, so let us start with bank. Bank is an easy account. Now what I'm going to do now, you need to also study this. We are now busy with the cash receipts journal. When we receive money, so this is everything to do with when you receive money. When we receive money, bank will be debited. So this amount will go to the debit side of bank. Everything else in your cash receipt journal will be credited, except for cost of sales. This is the exception. Cost of sales goes to 2 different places. You debit cost of sales account with this amount, and you credit trading stock with this amount. And you need to go and study this, okay? So your bank is debited. Everything else in the cash receipt journal will be written on the credit side, except for cost of sales. That goes to the debit and the credit side. The debit side of cost of sales and the credit side of trading stock. Now, let us quickly stand still before we're going to do this with a trading stock account, because I know that most learners struggle with this. Okay. Now, if you look at the trading stock account, trading stock is an asset. So it's debit plus, credit minus. Okay, remember, this is the line. I'm going to make the T account so that you can remember. It works just like the T accounts we do when we complete the accounting equation. Now, when do you write on the debit side of trading stock? When does trading stock increase? When you buy trading stock. And if you look at the accounting equation, when the transactions say you bought trading stock, which 2 accounts are involved? Bank and trading stock. So trading stock increases and bank decreases because you're paying for the trading stock. So trading stock is debited and bank, that you're going to write here, is credited. Now, when does your trading stock decrease? When you sell trading stock. That's the only time that trading stock decreases. So, if you do the accounting equation, you know that in a sales transaction, it's sales and bank, but then it is trading stock and cost of sales. So, trading stock decreases with the value of cost of sales. So by just looking at this account, you need to be able to tell the story of what is happening here. So if I give you a completed ledger, you need to be able to understand what is going on within the information. Okay, but let us go back to the transactions. So we are busy with the cash receipt journal. Now we're going to look at the cash payment journal. In the cash payment journal, we lose money. Okay, now when we lose money, bank is credited. Why? Because bank is an asset, debit plus, credit minus. And this is the cash payment journal. So bank is paying, bank is losing money, minus. So bank will be credited. Everything else will be debited because they are all expenses, and expenses falls under owner's equity. And owner's equity is debit minus credit plus. And whenever we pay for something, it's an expense. So you can just know bank is credited in the cash payment journal, and every single other account will be debited. Okay, so you can go and study that off by heart. Okay, so now let us first book bank over because it's the easy one. When you go to the bank account, it's an asset, so it's debit plus, credit minus. So on the debit side, you will have your total receipts from the CRJ. Always, always, always. You can also write sundry accounts. But I think for now, I'm going to teach you to write total receipts. It's easier to remember. And remember, we do the ledger at the end of the month. So go and see what is the month that we're busy with, January. So what is the end of January? Now, I taught the learners the knuckle test. So you use your knuckle. The first knuckle is January, February, March, April, May, June, July. So January has 31 days. February has 28 days. March has 31 days. April has 30 days. May has 31 days. So between the knuckles is 30 days. On the knuckle is 31 days. So if you look at January, it has 31 days. So you book the information on the last day of the month of January, which is the 31st of January. So on the debit side of bank, we have our total receipts, CRJ. On the credit side, we have our total payments, CPJ, and it's booked on last day of the month of January. So now you go to your CRJ. You can actually study this off by heart, that the bank consists of balance drawdown on the debit side, or if I say it was a negative balance drawdown, it means that you had a negative bank balance, it would be on the other side. And then definitely you will always write total receipts on the debit side, CRJ, and total payments on the credit side, CPJ. So now you have to go to your CRJ. Let's start with that one first. Remember bank, the CRJ amount in bank is debited. So you go to the debit side of bank and you write 4,000 Rand. That's how much you received for the month of January. Then you go to your CPJ, where you are paying money, CPJ. And remember, I taught you that bank is always credited in the CPJ, the bank amount. So it's 3,000 Rand that I paid for the month of May on my expenses. 3,000 Rand. Now we aren't finished yet. We now have to balance this account. How do we do that? So first thing, you're going to draw a line under the last amount that was written, which is this one. Double line here. Draw a line. Double line here. Okay. You're going to place the largest amount in the total columns. 30,000 plus 4,000 is 34,000. And here we only have 3,000. So what is the largest amount? 34,000. And we're going to place that into the total columns. 30,000 plus 4,000 is 34,000. But this side should equal this side. It should balance. So now we have to calculate what do we need in order for this to balance. So you are going to now calculate the balance, and it's carried down. But I always tell my learners to remember you are calculating it. So that's what the C stands for. To remember that it's carried down, that comes on top. So how much do you need in order to get 34,000 Rand? So you obviously say 34,000 minus 3,000 equals 31,000. Now, after you've calculated the balance carried down, you need to bring it down to the opposite side. Do not make the arrow in the test. It's just for me to explain. So this information here, you bring down to the opposite side. So it becomes the balance brought down 31,000 Rand, and it's for the 1st of February, for the next month. So this balance you wrote down here, that you received from this information here, is basically this balance that they brought down when they calculated it from the previous month. So the December ledger had a balance brought down of 30,000 Rand. But January has a balance brought down of 31,000 Rand that will be written in your February's ledger where this is written. So this is a continuous cycle. Okay, so now we're going to do the sales account, the sales, which is quite easy. Sales is a very easy account. Okay, sales is an owner's equity account, and it's an income because it is money we received and it's written in the cash receipt journal. So this total goes to the credit side of sales. Remember I told you cash receipt journal, bank is debited, everything else is credited except for cost of sales. It's the exception. Okay, so this sales amount here goes to the credit side of sales. This is the credit side of sales. So now, when we sell, you know, a transaction in sales got 4 accounts. Which account goes with sales according to your T account? Bank. The money goes to bank. CRJ, 4,000 Rand. And it's on the 31st of January because we are doing this ledger on the end of the month. And it's as easy as that. So now we're going to do cost of sales and trading stock. And cost of sales and trading stock goes together. Remember, in a sales transaction, we have sales and bank. So basically what we're saying is that sales is credited with bank, so bank is debited with sales. But we're not going to write sales and all the things that we received the money for. We just want to say total receipts, and we have the total amount of money received for the month. So this amount here is included in this amount for total receipts. Okay, so now we're going to do trading stock and cost of sales. Now, as you can remember, with your T accounts, when we did the accounting equation, when we sell, we've got bank and we've got sales. Now, we've already done these 2 accounts in the ledger. Sales we've done, and bank this amount is included in the total receipts amount. But you also have cost of sales and trading stock, because what are you selling? You are selling trading stock, and the value of the trading stock is cost of sales. Cost of sales is an owner's equity account, asset, trading stock is an asset. Okay, so when we sell, do we get trading stock or do we lose trading stock? We lose trading stock. The only time you write on the debit side of trading stock is when you buy trading stock. Okay, the only time you write on the credit side in EMS accounting is when you sell trading stock and the person takes it home with them. So you're losing trading stock. So that is why trading stock is credited in a sales transaction. If trading stock is credited, cost of sales will be debited. Okay, so remember this. So now, remember we said when we are buying trading stock, we write on the debit side because our trading stock increases. Let us do this one first. In the cash payment journal, you will see there's a trading stock account. And this trading stock account is when you buy trading stock because you're paying for it. Now, when I buy trading stock, if I do a normal T account for buying trading stock, what would it look like? If I do a normal accounting equation, it will be bank, because I must get the money from somewhere. What am I buying? I'm buying trading stock. They are both assets. So when I buy trading stock, my trading stock increases. So my trading stock account is debited, but my bank decreases because I'm losing money. So basically it will look like this if I had to put this in a T account. Trading stock increases to the value of 3,000 Rand and bank decreases with a value of 3,000 Rand. There you can see. Okay, so this amount here where bank is credited with trading stock is already included in your total payments. But you must still reflect that trading stock, when you are buying trading stock, cash payment journal, that my trading stock increases. Okay, so my trading stock increases because I am buying it, CPJ. Where do I get the money from? From bank. How much am I paying for this trading stock? 3,000 Rand. Okay, so we are done with that one. So now let us do cost of sales. Cost of sales is always an expense. Okay, cost of sales is the cost of the things that we are selling. What are we selling? We are selling trading stock. Okay, so it's always an expense. Now, where do I get the total of cost of sales? In the CRJ. Remember, it's not an income, it's just listed here next to sales so that you can see that you have made a profit. But you're going to take this total here and you're going to place it here, 2,000 Rand. So the cost of the sales was 2,000 Rand. What was the sale? It was trading stock, and it's on the 31st of January. But now, remember in accounting, if the one account is debited, the other account must be credited. So if cost of sales is debited with trading stock, then trading stock must be credited with cost of sales. On the 31st of January. Okay, I'm going to say that again. Cost of sales is always an expense. You never write on this side. So your balance drawdown goes in here. If you don't have a balance drawdown, you simply just start with the transaction of the month. Okay. Cost of sales is an expense. Why? Because it's a cost of the trading stock that I bought before I'm going to put it on the shelf and sell it. Okay, so that's why you write trading stock there. Where do you get this information? From the CRJ. From the CRJ. In CRJ, there's a cost of sales column because cost of sales needs to go with the sales column in the CRJ. But it's not an income, it's still an expense. So that 2,000 Rand is written here because the cost of the sales is 2,000 Rand and it is trading stock. And this information I got from the cash receipt journal. If cost of sales is debited with trading stock, then trading stock must be credited with cost of sales and the same amount. So that is as easy as that. Okay, so now, as you can see, there's something written down on the debit side and something written down on the credit side. So we need to balance these accounts. So what do? You draw a line under the last amount, which is this one. And in the same line, you draw a line, a double line. So now you ask yourself, which of these two amounts are the largest? Here we have 7,000 Rand. Here we have 2,000 Rand. So the largest amount is 7,000 Rand. So you place that into the total column. 4,000 plus 3,000 is 7,000, but 2,000 is not 7,000. So we need to calculate the balance carried down. So you say balance carried down on the 31st. You don't have to write that again. 7,000 Rand minus 2,000 Rand is 5,000 Rand. So now the balance carried down is on the credit side. Now you bring it down to the opposite side, which is debit side, and it becomes balance brought down. Remember, the carry down stands for calculate. Remember it like that. You calculated that amount. Now you bring it down to the opposite side, 5,000 Rand on the 1st of Feb. So the 1st of Feb, my balance brought down will be 5,000 Rand. Grade 9s, and this is how you complete a ledger. I hope that this helped you. If you have any questions, you are welcome to come and see me. I'm always in my class available for help.